Welcome back to Factful Finance. If you're feeling a little uneasy about the market, you're not alone. Picture this, a $4 trillion drop in the stock market, just like that. It's happening right now. The S&P 500 has shed nearly 10% from its all-time high, and the tech sector, once the golden child of Wall Street, is taking a beating. The news feels grim, but here's the question on everyone's mind. What should investors do now? Let's dive in. First off, let's acknowledge the big picture. We're seeing a massive shakeup in the market, $4 trillion lost in value. This isn't just numbers on a screen, it's a major reset. And the driving force? Uncertainty. The market has been rattled by the ongoing trade war and policy changes under President Trump's administration, with tariffs creating a ripple effect that's spreading across the global economy. You've heard it. Global uncertainty is the theme of the year. The S&P 500 is now down more than 8% from its February peak. Some companies like Tesla have seen their value evaporate overnight. And we're not just talking about tech stocks. Even Delta Airlines has slashed its profit forecasts due to economic turbulence. But what does all this mean for you, the investor? Let's break it down step by step, so you know exactly what action to take. 1. Stay calm. Don't panic sell. We've all been there, watching your portfolio dip and feeling that rush of anxiety. The knee-jerk reaction is often to sell off everything and cut your losses. But here's the reality. Panic selling locks in your losses. Historically, market corrections like this are temporary, and those who stay the course typically recover and even thrive. Take Olivia, for example. Back in 2008, she saw her 401k drop by 30% during the financial crisis. Instead of selling, she took a step back, reviewed her long-term strategy, and kept contributing regularly. By the time the market recovered, her portfolio had more than doubled. Number 2. Assess your risk tolerance. This market shift is a good time to reassess your risk tolerance. If you're nearing retirement or just uncomfortable with high levels of volatility, it might be time to adjust your portfolio. Risk management is key here. Diversification is more important than ever. Spread your investments across different sectors. Don't put all your eggs in one basket. Look to sectors that tend to outperform during times of uncertainty, like utilities or healthcare, while keeping a watchful eye on bonds and government securities for safety. 3. Focus on long-term goals. The stock market has always had ups and downs. If you're in it for the long haul, stay focused on your goals. A stock market correction could provide an opportunity to buy quality assets at a discount. Dollar cost averaging, the strategy of investing a fixed amount regularly, regardless of market conditions, could help you avoid trying to time the market and benefit from lower prices as stocks fall. This strategy has proven effective over decades, even during massive downturns. 4. Look for market opportunities. Here's a truth many investors miss. Market corrections can create opportunities. Companies that are fundamentally strong but temporarily battered by market conditions can be undervalued. Take a close look at companies like Apple or Nvidia. These are the giants that, while volatile right now, have long-term growth potential. Is this a good time to pick up shares at a discount? Only you can decide, but keep your eyes open. 5. Don't forget about tax implications. In times of market volatility, it's easy to forget about taxes. Tax loss harvesting is a strategy you can use to offset some of your losses by selling investments that are down and using those losses to reduce your tax bill. Be sure to consult a tax advisor to make sure you're not leaving money on the table. The tax code is complex, but with the right guidance, you can use these market drops to your advantage. 6. Stay informed, but don't get overwhelmed. It's crucial to stay informed, but don't let the news dominate your day. We're living in a time where headlines shift minute by minute. The real question is, how are you going to use that information to make informed decisions? Take the time to review your investment thesis, understand the risks, and look for insights from reliable sources. Don't chase headlines, but use them as a tool to refine your approach. So what's next? The market will recover. History has shown us that time and time again. The key is sticking to your plan and adjusting where necessary. If you're uncertain, or if you haven't already, Now's the time to speak with a certified financial professional who can help guide you through these turbulent times. Now, I want to hear from you. What's your game plan? Are you making any moves in this market downturn? Drop your thoughts in the comments. I respond to as many as I can. And if this video gave you some clarity on how to handle this market crash, don't forget to hit subscribe for more strategies to take control of your financial future. Ready to take your finances to the next level? Click on the video right here. Trust me, you don't want to miss it.